In this video, I will try to explain the reporting requirements under 143 subsection 3 of the Companies Act. And in that 143 subsection 3 also, I am specifically going to explain 143 subsection 3 clause J, which contains some amendments which have some recent additions under that 143 subsection 3 clause J. And there are a few complex points which I will try to make it simple through this explanation. So as we all are aware, there are some reporting requirements given under Companies Act under 143 subsection 1, which contains 6 matters which are required to be reported. And under 143 subsection 3, there are altogether some 9 plus 6, 15 points are there which are required to be reported by the auditor in his audit report. And under which paragraph these points are required to be reported? So all this 6 and also this 15 points, both this put together, the total 21 points are required to be reported in the audit report under the paragraph reporting on other legal and regulatory requirements. In the audit report which we prepare, there will be so many paragraphs will be there, so many contents are there. Out of all that contents, one particular content, one particular heading which says report on other legal and regulatory requirements, under that paragraph the reporting requirements under 143 subsection 1 and also the reporting requirements under 143 subsection 3 are required to be reported. And as I have told, I will be specifically concentrating on 143 subsection 3 clause J. So if you observe here, there are clauses starting from A, 143 subsection 3, clause A, clause B, clause C. So like that, if you keep on scrolling it, there will be till clause J. And why specifically this clause J I am focusing here is, why? Because it contains some newly added points. So let us try to understand what are those reporting requirements under 143 subsection 3 clause J. See, this clause J was not there from the beginning of the act itself. Initially, when the reporting requirements were introduced, there were reporting requirements under clause J only, clause I only, sorry. So there are only 9 reporting requirements. Clause J was given as residuary clause, which means in future, if the government wants to include extra reporting requirements under 143 subsection 3, they can include it under clause J. So initially as a residuary clause, they have introduced this. Now over a period of time, extra reporting requirements were added. Till now, there are 6 extra matters which were added under 143 subsection 3 clause J. Let us try to understand them. See, out of that 6 points also, initial 3 points are there from a very long period of time. 4th, 5th and 6th points are recently added. So let us try to understand them now. So let us now start with the first one. So 143 subsection 3 clause J, in that also first point, whether the company has disclosed the impact, if any, of pending litigations on its financial statements, on its financial position in its financial statements. So what does this first point say? Whether the company, when I say company, whether the management of the company has disclosed the impact, if any, of pending litigations on its financial position in its financial statements. So what they are simply asking here the auditor to do is to check whatever client you are doing the audit, whether that client is going through any pending litigations. Are there any pending cases going on against the company? If yes, the impact of that pending litigations should be disclosed in the financial statements. When I say disclosed in the financial statements, it is whose responsibility? Management's responsibility. See, some people might be of misconception by reading this. Okay, 143 subsection 3 is expecting auditor to give disclosure of pending litigations. The answer is no. Or this particular section is not asking auditor to give disclosures in the audit report regarding pending litigations. But what in fact this particular section expects the auditor to do is check whether management disclosed that impact of pending litigations in the financial statements. Once again, I am repeating, this point is not expecting auditor to give disclosure. Then what does this point expect the auditor to do? This point expect the auditor to check whether management gave the disclosure in financial statements or not. This particular section is not expecting auditor to give any disclosure. Just check whether management gave disclosure. If they gave the disclosure, I will say yes, management has disclosed the impact of all the pending litigations in the financial statements. In case if the management does not say, in case if the management did not disclose certain contingent liability or provision arising out of a pending litigation, then I will say it here, no, management did not disclose the impact of pending litigations. Just you are required to give that comment whether management disclosed the impact of financials or disclosed the impact of pending litigations on the financial statements or not. Clear? Next one, second point, whether the company has made provision as required under any law or accounting standards for material foreseeable losses, if any, on long-term contracts including derivative contracts. Now, what is this particular point about? So let us try to understand it with the help of example. So if we take one simple example, so what they are trying to say here is whether the company has made provision. Provision for what? Provision for material foreseeable losses. Material foreseeable losses, if any, arising out of long-term contracts. Now, if I have to put it in simple sense, this point is nothing but related to concept of conservatism or prudence. So I hope we all are aware what is this concept of conservatism or concept of prudence. So as we all know, there are generally accepted accounting principle, and one such generally accepted accounting principle is concept of prudence or conservatism. Now what does this concept of prudence or conservatism say? So concept of prudence says that recognize anticipated losses, don't recognize anticipated gains. If you are expecting a profit in the future, don't recognize it till that profit has actually occurred. If you expect a loss to happen, don't wait till that loss to happen, recognize it immediately. This is what the concept of prudence or conservatism says. No, the same point they are saying here. If the client has entered into any long-term contract, and on that long-term contract there is a material foreseeable loss, you are able to foresee, you are able to predict that the company has taken in one long-term contract, and in that long-term contract the company is foreseeing the loss, they are expecting a loss to happen out of this long-term contract. Now we should not wait till the completion of the contract to recognize for that loss. You need to create a provision immediately. Now what does this sentence exactly mean? Take for example, there is a client X Limited. Now this client limited entered into a contract which will go for 5 years. The duration of that contract is 5 years. Now over this 5 years, this is year 1. Year 1 they have accepted the contract, and this contract is going to be there for 5 years. Now the total revenue from this entire contract which is going to happen for 5 years is 100 crore rupees. But in the year 1 itself, the management of the company realized that they gave a wrong quotation for the contract. Why? Because over this 5 years of time for completing this contract, they will incur a cost of 120 crores. So this is the revenue, this is the cost. By wrongly estimating the cost, they have given a wrong quotation and contract was allocated to them. Now you can't say no. So you will get a revenue by completing the project of 100 crores only. But in year 1 itself, you have realized that you are going to make a loss of 100 and you are going to incur a cost of 120 crores on the project. So in year 1 itself, you have realized that on this contract, you will make a net loss of 20 crore rupees. You are not going to make any gain out of it. You are going to make a loss of how much? 20 crore rupees on this contract. When you came to know year 1. Contract is going to go on for how many years? 5 years. Now, will you wait for the completion of 5 years to recognize this loss of 20 crores? The answer is no. The act says, even the standards also says, the company should not wait till the completion of 5 years to come to recognize this loss of 20 crores. The company should recognize the loss in year 1 only. Why? Because concept of conservatism, which says recognize anticipated losses, don't recognize anticipated gains. So the company should not wait till the completion of the contract of 5 years to recognize this loss of 20 crores. They should have created a provision in year 1 itself. So that provision has been created or not, checking that is auditor's responsibility. That's all. So that is what this particular point says. If I read it once again for you, whether the company has made provision as required under any law or accounting standards for material foreseeable losses, that too if any on long-term contracts including derivative contracts. See, derivative contracts are something which are stock market instruments which are actively traded. Now if we go into the derivative contracts and all, that itself will take some 3-4 hours of time to make you understand. So just remember, derivative contract is a kind of contract whose duration can be short term also, whose duration can be long term also. Like one example I have to give for derivative contract, you might have heard in the stock market related things, they say something called futures and options. So these are called as derivative contracts. Sometimes these contracts, these futures and options also will go for more than 1 year. On that derivative contracts also, on these futures or options also, if the company came to know that they will make a loss, even though the contract is for more than 1 year, still they have to recognize the loss in the year whenever they become aware of it. Don't wait till the completion of the contract to recognize the loss. That's all. This is what the second point is about. Now let us try to understand third point. Very simple, no complication at all. Whether there has been any delay in transferring the amounts required to be transferred to investor education and protection fund. Whatever money is there under Companies Act, as we all are aware, there are different amounts which are required to be transferred to IEPF. Like dividend declared, but no one has come and claimed that dividend, that amount will remain in one separate account for 7 years. Within that 7 years also, if no one is coming and collecting that dividend, that unclaimed dividend along with the shares thereof are required to be transferred to IEPF. Company cannot keep it. That money has to be transferred to investor education and protection fund. Similarly, debentures are matured, but no debenture holder is coming and collecting it. It will remain with the company in a separate bank account for a certain period of time. After that, that money will also be transferred to IEPF. So like this, under Companies Act, under various sections, they have clearly mentioned different sums of money which are required to be transferred to IEPF. And for each sum of money also, there will be a tentative date also. Within this due date, within these many days, the money should be transferred to IEPF. Now what they are asking me to check is, as an auditor, whether there has been any delay in transferring the amounts required to be transferred to IEPF, Investor Education Protection Fund. Nothing but first find out whether your client company is required to transfer any funds to IEPF. If yes, whether your client has transferred that money within the due date or your client has transferred the money beyond the due date, that you need to report it. That's all. If your client has transferred the money to the IEPF within the due date, well and good, no problem. I will say the same thing. My client has not made any delay in transferring the money required to be transferred to IEPF. If I find that some amounts are there which are required to be transferred to IEPF, my client has transferred it, but beyond the due date he has transferred it. 5 days delay he has made. The same thing I will mention. My client has made a delay of 5 days for transferring the money required to be transferred to IEPF. Clear? So these are initial 3 points, and these 3 points under clause J are there for a long period of time, but in the recent time some extra points were added. Let us try to understand what are they. So coming to the fourth point, in the fourth point also there are 3 sub points are there. Let us try to understand here where the complexity comes, here where most of the students face the struggle. So I will try to explain it in a very simple language, in an easily understandable manner, but please do follow. So sentence is very lengthy. First, I will read it. You might not understand it completely, but please observe, please pay attention to the way I am reading. See, the skills of reading are very, very important. You need to do interpretation a lot. So I will be reading this entire long paragraph, whatever has been given here. I know you will not be able to understand it by just giving it a single reading, but I want you to pay attention the manner in which I am reading, where I am taking pause, where I am linking with the next phrase, so that I want all of you to pay the attention. So please focus now. Whether the management has represented that to the best of its knowledge and belief. other than as disclosed in notes to accounts. No funds have been, once again, no funds have been advanced or loaned or invested either from borrowed funds or from share premium or any other sources or kind of funds by the company to or in any other person, entity, including foreign entity called as intermediaries, with the understanding, whether recorded in writing or otherwise, that the intermediary shall, whether directly or indirectly, lend or invest in other person or entities identified in any manner whatsoever by or on behalf of the company, whom we generally call them as ultimate beneficiary, or provide any guarantee, security, or the like on behalf of ultimate beneficiaries. I know it's very clumsy, you would not have understood anything. So now, this entire long paragraph, whatever we have read, that we will try to divide it. Each part of that paragraph we will try to understand, so that by the end of the last part of the paragraph, we will have overall picture of the entire provision, whatever they are trying to say. So let us try to divide it first now. So what they are trying to say, whether management has represented that, nothing but you should mention whether management gave you representation. Representation means nothing but confirmation, nothing but written representation. In the SA 580 standard, which is there as a part of CA inter syllabus, there will be written representation requirement. The same thing they are asking, whether ask the management to give the confirmation. Nothing but as an auditor, if I am conducting audit of the client X Limited, I should go to the management and ask them to give some confirmation to me, written confirmation. What written confirmation? To the best of its knowledge and belief. To whose knowledge and belief? To the best of management's knowledge and belief. That means to the extent management know and believe. So I will ask the management of my client company to give me a confirmation that to the best of their knowledge and belief, to the extent they know and believe, other than as disclosed in the notes to accounts, without disclosing in the notes to accounts, they should not have done some transactions. What kind of transactions? See, understand the context here. So I should ask the management of the client company, to the extent they believe and they know, without disclosing in the notes to accounts, they should not have indulged in some transaction. That means by hiding from the shareholder, they should not do certain kind of transaction. Ask the management to give a confirmation that yes, really they did not do such a kind of transaction. Which kind of transactions? Let us try to understand. No funds have been advanced, loaned, or invested by the company. I will come to the brackets, content in the brackets later. So what kind of transaction should not have been engaged into? No funds, no amount has been advanced, given as advance, or given as loan, or invested by the company. By the company in the sense your client company. So if we take an example here, what they are trying to say here is, assume I am conducting audit of the company X Limited. This is my client company. Now I should go to the management of this client company X Limited, ask them to give a written confirmation that without disclosing in the notes to accounts, they have not given any funds, either in the form of loan or in the form of advance or in the form of investment. Your client should not have given any funds, either in the form of loan or in the form of advance or in the form of investment. Now if we come to the content which is there in the brackets, either from the borrowed funds or from share premium or any other source or kind of funds. Now this loan, advance or investment, whatever your client company is giving, that could be from the borrowed money, that could be from their own money, that could be from their securities premium, whatever could be the source of funds, ignore. The client should not have given any loan, investment or advance, either from their borrowed funds or from their reserves or from any other kind of source of funds. to or in any other person, entity, including foreign entity. Your client should not have given loan to some other person, entity or foreign entity. Assume for the time being Y Limited. X Limited, your client company, they should not have given any kind of loan, advance or investment to another entity, person, including foreign entity, and we call them as intermediary. So here Y Limited will become what? Intermediary. Understood? So no funds should have been given either as a loan, advance or investment by your client company to another person or entity or foreign entity, which we call them as intermediary. Now next part, what does that say? With the understanding. Now there is an understanding between whom and whom. There is an understanding between the client company and this intermediary. There is an understanding, nothing but there is a mutual understanding between the two. Sir, what understanding they are having, sir? Let us see what they are saying. What kind of understanding? Whether recorded in writing or otherwise. That understanding could be in written format or that could be in a oral format, whatever it could be. But there is an understanding, mutual understanding between client company and intermediary, either in writing format or in any other format. That understanding is that the intermediary shall, who is intermediary in our example? Y Limited is an intermediary in example, is an intermediary in our example. So that intermediary shall, whether directly or indirectly, lend or invest in other person or entities identified in any manner whatsoever by or on behalf of company. So the understanding is, whatever money my client company has given to Y Limited, there is an understanding that Y Limited will go and give this money as either as a loan or advance to some other company, say for example Z Limited, who will be identified by my client company. Which means that my client company is going to Y Limited, giving them some loan, advance or investment, and mutual understanding is that, like X Limited will be saying to Y Limited, I will give you 10 lakh. You take this 10 lakh rupees and give it to somebody else, Z Limited. I will tell you name of some other company. In our example, that is Z Limited. So X Limited is going to Y Limited, giving some amount of money in the form of loan, advance or investment, and asking this Y Limited to go and give this money to Z Limited. Now this Z Limited will be called as ultimate beneficiary. Now this Z Limited will be called as what? Ultimate beneficiary, who will be identified by my client company. Or provide any guarantee or security or the like on behalf of ultimate beneficiary. Or the understanding could be not just to directly give loan or advance, or at least there could be understanding that Y Limited will give a guarantee on behalf of Z Limited to third party. So X Limited is giving amount to Y Limited, not to directly give the amount to Z Limited. Even the understanding could be you act as a guarantor for Z Limited. So that also could be an understanding. So if you observe, this entire transaction is nothing but X Limited, my client company, wants to do some favor to Z Limited, who is ultimate beneficiary. Either they are prevented from doing it or they are answerable to so many people by doing it. So they want to avoid that, but still they want to do the favor. X Limited wants to do some favor to Z Limited. Assume either they are prevented from doing it or they are answerable to so many people by doing it. Now X Limited still, it wants to avoid all these litigations, but still it want to do some favor to Z Limited. So what they have done, they have created a fake transaction here. So they have created one intermediary. And what they have done, instead of directly doing the favor to Z Limited, X Limited did a favor to Y Limited and asked the Y Limited to do the same favor to Z Limited. So you tell me, this looks like a normal transaction or a manipulative transaction? This clearly looks like a manipulative transaction. This clearly looks like what? A completely manipulative transaction. So that's why they are asking auditor to get the confirmation that your client, without disclosing in the notes to accounts, your client should not have done these kind of transactions. Ask the management to give a written confirmation, not just oral confirmation. Ask the management of your client, ask the board of directors of your client, sir, give me a written statement that without disclosing in the notes to accounts, you have not done this kind of transaction. You should not have given any fund to intermediary with the understanding that intermediary will give the same amount to some ultimate beneficiary. You did not indulge in these kind of transactions. Give me a written confirmation. Understood? That's all. This is what that particular point says. So if I read the sentence from the beginning once again, where whether the management has represented that, ask the management to give a confirmation to the best of its knowledge and belief, to the extent they know and believe, other than as disclosed in the notes to accounts, without giving disclosure in the notes to accounts, no funds have been advanced, loaned or invested by the company, either from the borrowed funds or share premium or any other source of funds, to or in any other person or entity, or including foreign entity, which we call them as intermediary in our example Y Limited, with the understanding, with a mutual understanding, whether that could be recorded in writing or otherwise. What is that understanding? The intermediary shall, whether directly or indirectly, lend or invest, in our example Y Limited should lend or invest in other person or entities, in our example Z Limited, identified in whatsoever by or on behalf of the company. Nothing but my client company will say to which company this intermediary should go and give that money. Or not just directly lending or investing, either the understanding could say that intermediary should provide a guarantee or security on behalf of ultimate beneficiary. So I told you final summary also. My client company wants to do some favor to ultimate beneficiary, but instead of doing it directly, they have created one intermediary in between. So whether your client has indulged in these kind of transactions, ask the management to give a confirmation and report that here. Clear? Next, second point. Second, now since if you have understood the first point, second point is going to be damn simple. If you read it once, you will be able to easily find it out. Let me read it once for you. Whether the management has represented that, ask the management to give confirmation to the best of its knowledge and belief, to the extent they know and believe, other than as disclosed in the notes to accounts. Same terminology, no? Next, no funds have been received by the company, client company. No funds have been received by the company from any person or entity, including foreign entities, which we call them as funding parties. In the previous example, your client gave the money. In this example, what they are saying, your client received the money from other entity, which we call them as funding party. Let me read it first once the entire provision, then I will give you example to make you understand. So no funds have been received by the company from any person or entity, including foreign entity. We call them as funding parties, with the understanding. Here also there is an understanding, whether recorded in writing or otherwise, that the company shall, whether directly or indirectly, lend or invest in other persons or entities identified in whatever manner by the funding party, which we call them as ultimate beneficiary, or provide any guarantee or security or the like on behalf of ultimate beneficiary. So what they are trying to say here, if you give a reading once, you will be able to automatically understand it. So I will wait for a while. Now you also try to give a reading of this particular paragraph once. I will wait for a minute. You will automatically get it. Then I will give you one example to close this particular explanation. Come on, give a reading once, read it once. Okay, so let me explain now what exactly they are trying to say here. Now they are saying that here also ask the management to give a confirmation that without disclosing in the notes to accounts, some kind of transactions are not happened. What are that kind of transaction? Assume my client company is here now, A Limited. This is my client company. My client company should not have received funds. In the previous case, my client given the funds. In this case, what? My client, whether they have received any loan, advance or investment from another entity, including foreign entity. Assume for the time being B Limited. And here we call this B Limited as funding party. We call this B Limited as what? Funding party. So no funds have been received by your client from another party, entity or foreign entity, which we call them as funding party, with the understanding. Here also there is an understanding between whom and whom? Between client company and funding party. There is an understanding. So what is that understanding? Whatever money my client has received from the funding party, the same money my client will go and give it either in the form of loan or advance, or my client will not directly give a loan, they will give a guarantee on behalf of some third party, C Limited, who will be identified by the funding party. And we call this C limited here as ultimate beneficiary. So if I have to end it with one simple line of difference between the previous point and this point, in the previous point, our client created an intermediary. In this point, our client itself is an intermediary. So here what exactly happening is some funding party B limited wants to do some favor to ultimate beneficiary C limited. But either they are prohibited from doing it or they are answerable to so many people by doing that. Now, in order to avoid that, what this funding party has done is they have used our client as a vehicle. They have used our client as a intermediary. So now B Limited, some funding party is giving money to my client company with the understanding that my client company will go and give this money as loan, advance or guarantee to ultimate beneficiary. So your client should not have indulged in these kind of transactions. Ask the management to give confirmation regarding this also, that their company did not involve in these kind of transaction. Ask the management to give confirmation. So if I give you summary, first point says ask the management to give a confirmation that they did not create any intermediary. Second point, ask the management to give a confirmation that they did not act themselves as an intermediary. That's all. Now, what is the third point is based on such audit procedures that the auditor has considered reasonable and appropriate in the circumstances, nothing has come to their notice that has caused them to believe that representations under subclause 1 and 2 contain any material misstatement. Now, what is this third point is, see, when you go and ask the management to give confirmation, they will confirm. Like I went to the management and asked them, sir, did you create any intermediary? If no, give me a confirmation. Management gave me confirmation, sir, we did not give any funds to intermediary so that they will go and give it to third party. No contracts we have created like that. Second point also, I asked them the confirmation. Sir, did you act as an intermediary? Management gave confirmation. No, sir, we did not act as an intermediary. So I got all the two confirmations. First confirmation also I got here. Second confirmation also I got here. Now, can you blindly believe all that confirmations given to you by the management? Management told, no, sir, we did not do any of this kind of transactions. Management gave the confirmation. Well and good. Will you blindly believe all that confirmations? No, that's what that is the third point is saying. So management will give confirmations, but don't blindly believe it. You also perform audit procedures from your end to make sure that whatever confirmations given to you by the management for the above two matters, are they genuine or are they containing material misstatement? You try to perform audit procedures. Sir, which audit procedure, sir? Your professional judgment. You can provide inquiry, you can do inquiry, you can do inspection, you can do observation, whatever it is, you can perform analytical procedures, perform any audit procedure and make sure that whatever confirmations are there which are given by the management for the above 2 points, they should not contain any material misstatement. That means they are genuine and management is not trying to give you wrong confirmation, to make sure that you try to perform audit procedures whatever you find suitable. That's all. So these are the three sub points given under point number 4. Clear? Now let us try to understand two more points which were added. Fifth point, very simple. Whether the dividend declared or paid during the year by the company is in compliance with section 123 of the Companies Act. Nothing but whatever dividend your client has declared, whether that dividend declared has been in compliance with section 123 of the Companies Act or not. Section 123 contains a detailed provisions regarding dividend payment and all. So as an auditor, you need to check that if your client company has declared any dividend, check whether that dividend has been declared after complying with all the conditions of section 123. So that's what you are supposed to check. Very simple point. Next one, sixth point. This is very recently added point and it will come into force for this financial year only, financial year 22 to 23. So what is this point? Let us try to understand. Whether the company in respect of financial years commencing on or after the 1st April 2022 has used such accounting software for maintaining its books of accounts, which has a feature of recording of audit trail facility, and the same has been operated throughout the year for all the transactions recorded in the software, and the audit trail feature has not been tampered with, and the audit trail has been preserved by the company as per statutory requirements for record retention. Now what is this point? So this point, if you observe carefully, all the companies for the financial years commencing on or after 1st of April 2022. That means from the financial year 2022-23, from the financial year 2022-23. So from the financial year 2022-23, every company should use such an accounting software which will have a option of recording audit trail. So as an auditor, you need to check that after the financial year, that is from the financial year 20 to 23, current financial year only, from this year, whichever company, whatever company is there, whatever accounting software they are using, like Tally, SAP, Oracle, or their own customized accounting softwares, whatever softwares they are using, that should have a option of recording audit trail. Now, what is this audit trail, sir? Audit trail means nothing but history of a accounting transaction. Who passed an transaction? Who is the person who passed the transaction? What time he has passed? Who approved the transaction? What time it has been approved? If subsequently, if the entry has been modified, who modified that entry? At what time it was modified? If any entry was deleted, who deleted that entry? At what time entry was deleted? Nothing but a history of entire accounting entry, that we call it as audit trail. So from the financial year 2020 to 23, all those companies which are using the accounting software, they should use such an accounting software that it should have an option for recording audit trail, not just recording accounting entries. The history behind that accounting entries also should be recorded. Who passed the entry, who approved the entry, what time it was passed, what time it was approved, who changed that entry, who deleted that entry. So this history of the entry also should be stored. Today Tally comes with this inbuilt feature. If the company is using the software called Tally, in that Tally software there is no need to be there is no separate requirement for worrying about audit trail. Why? Because Tally is having an inbuilt facility to record that audit trail facility. Okay, so as an auditor, I need to comment from the financial year 20 to 23, whatever accounting softwares are there, which the clients are using, whether those all accounting softwares are having a facility of recording audit trail, and the same has been operated throughout the year. For all the entries, this audit trail option should have been enabled from 1st April 2022 for the entire financial year. This audit trail facility should be working. And also, whatever audit trail has been recorded in the software, that should not be tampered, that should not be altered, that should not be changed, that should not be deleted. Audit trail should be kept as it is without any changing option. And also, audit trail has to be preserved by the company as per the statutory requirements for record retention. And whatever audit trail which has been recorded, that audit trail also should be preserved as per statutory requirements. In the Companies Act, they will say books of accounts and financial statements should be retained for 8 financial years. No, along with that financial statements and books of accounts, this audit trail also should be preserved for those many number of years. So software should have audit trail facility. This audit trail should have been working throughout the year. It should not have been tampered or changed during the financial year. And also it should be preserved for a certain number of years. Clear? See, this point has not yet been amended in your CA inter materials till now. This point was already added in the Bare Act, but this point was not yet updated in the ICI, CA Inter Study Material released for auditing. This point does not, that study material will not contain this particular point. Might be they could add it through RTP that I have explained to you well in advance. This point has already came into force, but the study material of ICI did not get yet updated. They might give this amendment as a part of RTP. So these are the reporting requirements under 143 subsection 3 clause J. Very important. Why? Because it contains all the recent amendments are there. High chances of getting tested in the examination. Hope you like this video. Please do subscribe for more such updates regarding auditing CA and CMA inter and CMA final CA final courses. Thank you guys.